it. So we're here for our Thursday night training on August 22nd. We've got a few topics we're going to discuss. I want us to do the questions and the answers and stuff first. And if we've, exhausted what we need, then I'll go into talking about the other stuff that I had. I will make sure that we incorporate the how to set the stop losses. I think that has to be covered. But doing the charting for the broadening formations piece can actually wait till another day if we don't get there. So I'd rather us work our questions and make sure everybody gets what they need here, and then we'll go on from there. Hopefully we'll be on about an hour, at most hour and a half. So we'll still get everything covered, but with no shortage of time. I just don't want to make sure that I'm not holding you past what's a comfortable time. Okay. Who wants to go first with questions? Preguntas. Nobody? Jamie, I guess you get to start.
Awesome. So check this out. Hey, I'll wait till it go last, but hey, if ain't nobody got a question. So first of all, hello everybody. This may be a relevant question for most people. This question has been narrowed all the way down to Russell 2000. But the answer doesn't have to be about Russell 2000. So I noticed a couple times, not just today, that sometimes there will be, so let me tell you the moving averages that I do have. I've got the 9, the 21, the 50, and the 200.
Okay.
Okay. So those are the ones I, just kind of, I don't even keep them on there all the time. So I noticed today again that so I'm trading the breakout, which is the first 15 minutes. So I marked the 15 minutes. Normally I just stay in the 15-minute chart since I'm waiting to see what the breakout is going to be. But I also want to see the higher time frames to see which direction the higher time frames are calling for. Or shall I say, which way they're moving. So today I noticed that the month, week, day, and 4 hour all was all providing support. And actually I believe the 1 hour did as well. But the 30-minute and the 15-minute were the two that were showing resistance with the same moving averages. So my question was, in a situation, so I know that obviously I'm not going by the monthly, weekly, or daily in this situation, but I did want to at least see, if they were all, how in alignment they were. The daily, the 4 hour to me are the ones that I would be more, and yeah, daily 4 hour will be the main ones. But so when we're in the situation where you have, those type of charts that are obviously is not always going to be in alignment. Which one, like what how do you confirm the direction? Because obviously we're looking at CNBC, so we're obviously checking checking all of our stuff with the VIX and all that other stuff. But when it comes to those charts that may not be, saying the same thing, how do we trade that, or how do we anticipate that, or how do we work with that to get in for our correct entries?
Okay, so I have two parts to this answer. The first question I would ask is which time frame participant are you trying to be? Are you trying to be a 5-minute, 15-minute, 30-minute participant or trader, quote unquote, or are you trying to be a 4-hour daily, weekly trader? Which one are you trying to be? Because depending on which one of those you're trying to be, that's the one you need to kind of be mindful more about. The second statement to that is reversals happen on the smaller time frames and then they extend out. So a reversal happens on the 5-minute, then it's on the 10-minute, then it's on the 30, then it's on the hour. So reversals start small and then magnify, right? So that's why people will say you can see if the trend is showing upwards, like overall bullish, and there's going to be a change in trend, you can start to see that change in trend on smaller time frames first. Whether it's confirmed or not, you'll see, because the 5 minute, 15 minute can be a lot of noise depending on how long you plan, what participant you are. If you're a weekly participant, then you want to be concerned about the 4 hour and the daily being in the same direction you're trying to go. But if you're trying to be a daily participant, which you are, because if you're trading each day, you're trying to be a daily participant, then you do want to be concerned about what is the 15 and the 30 and the 1 hour, what are those showing? Because you're only planning to be here for the day, right? Now, the difference between buying and selling is if you're buying and it's going one way and it starts to turn around, you're concerned about that because you don't want to have your, calls trade going the other direction. But if you're looking at it from the standpoint of, now I think you're looking at it from the standpoint of PDT hacks. So if you're looking at it in terms of a PDT hack, setting it and then setting the next side, you need to be concerned about those shorter time frames because you want it to continue in your direction enough for your second side to set. So you want to be looking at the 30 minutes, the 1 hour, and even, you can even pull in the 2 hour, 1 hour, 2 hour, 4 hour. You probably don't, but you want to see that the 4 hour is showing in the same direction you think it's going. You want that confirmation there. But since you're doing a short-term run, short-term run in order to catch the other side or feel the other side, then I think you should be as much concerned about the smaller time frame, not small like down to 5 minutes maybe, but 15, 30, an hour.
Okay. I mean, I do pay attention to the 5. But the main reason I pay attention to the 5 is just because I like seeing where it might go. You kind of have to wait all that time for the 15-minute candle to form.
Right.
So I do like to kind of switch to the 5. But the main, I would say the main thing that I'm usually in is going to be the 15 during the day. So that's the one I spend the most time on.
Yep.
So, well, first of all, thank you for that answer. So when they contradict, just go with, basically in my case, it would be the 15.
Yeah, go with that shorter time frame because that's what you care about. At this point, you want to make sure that it's going in the direction you needed to go for your PDT hack to lock.
Okay.
Right? That's what you're using it for, right? Or no?
Yeah. Mm-hmm.
Okay. Yeah. So then you want to.
I'm just making sure that with some of these, I mean, I won't drag this out, but the thing that I noticed, at least so far over the past couple of months with Russell 2000, has been if you get, I'll get in. My main thing is you got to get in on the correct side, right? So if it's going up, you obviously want to, start getting that PDT hack on the other side at the bottom. Well, I've also noticed that when you put in the other side of the trade, once the side 1 fills, side 2 spends a lot of, I mean, let me just say like this. The amount of dancing that Price does on my strike, it would win the new Olympic gold medal for breakdancing.
I don't know. That might not be hard because that Olympic breakdancing medal, I don't know about that.
Look, I mean, so what'll happen is, let's say if I get in at 10:30, 11, let's say even 10:45, literally at sometimes 3:30, 3:45, it may fail. So it'll take sometimes all day, but usually if it's close enough, it'll fill in the morning. So like if I'm at like 4.20, the price is worth 4.20, and I have it set for like 4.5, it might fill in the morning, which is fine. There's no big deal about it. But so I'm just trying to make sure I kind of get that fine tuned. I mean, I would like for it to fill obviously that day, but The fact that it's filling in general is fine with me, but I just want to make sure that some of these other little things can be eliminated in terms of what the impact might be and things of that nature.
Are you
So
doing 0 DTE or some other time frame?
I do. So I start off doing one DTE,
Okay,
and if it fits, so let's say if what's today? Thursday. So let's say today I'll do one DTE because I wanted to fill for tomorrow. And if it fills for tomorrow, then I'll do like the next day, like
okay,
2 days away.
got you.
I will, but I like to do a 0 DTE at like power hour time frame, like later on in the day,
Okay,
so I can spend less time. As long as I've locked like maybe a 0, like a 1 and a 2 day, then I'll do like a 0 DTE, or it usually ends up being a credit spread because only one side got good premiums. But
is it working out good for you? I see that you had one breach the other day, but everything else has been working out fine?
yeah, I would say in the past 2 months, I might have had only two only two of those not work out,
Look at you.
something like that. So I mean, I'm trying to do one PDT hack per day. I'm
Okay,
trying to average one per day for right now, and then which is one contract, and then I don't want to have to panic when it's time to scale up.
okay,
So I'm
got
trying to get all the details,
trying to
worked
build the
out with
muscle.
everything. So
Yep, got
I
you.
would love to scale up and start scaling up in September.
Mm-hmm. Okay, cool. Was that the end of your question?
Yeah, I think so. We'll implement and continue on. Thank you very much.
Okay, sure, you're welcome. Tiva, go ahead with your question.
I'm just wondering, just to piggyback off of Jamie, is RUT, can you trade it the same as SPX? So can you allow it to expire? Do you have to use the PDT hack? Okay. And then also, can you use the same SPX rules that you have on RUT?
Jamie?
What do you mean the same rules?
So the whole SPX book and playbook that Miss Alyssa has, can you use that on the RUT?
You know what? I hadn't even I hadn't even thought about it from that perspective. That's a good question.
Because
Um,
I'm wondering, if you're going in at the end of the day during power hour, why not just let it expire instead of using the PDT hack?
well, I enter at 10:30.
Okay.
So I look to enter at after 10:30. Let me say it that way. So sometimes
Mhm.
it might be 10:30, it might be a little bit later. But the main reason is the main reason why I'm doing the PDT hack is so that I can reuse collateral on a regular basis. And because it frees up your collateral once the second side locks. So
Mhm.
sometimes what'll happen, it'll be like if I catch momentum, for example, and it'll be, let's say, heading up or heading down, I can like follow it and do PDT hacks that will lock as it's going in that direction. So I can reuse the same collateral over and over. The trades will still expire, but I'll be able to get in, a little bit faster and lock it, you know, and I'm locking it in not just for today, but I could be doing tomorrow, expiration, 2 days from now, expiration. So it's more so about reusing the collateral. But in the afternoon, if I do a credit spread, then
Mhm.
I'll get in that and let it go worthless, as let it expire as well. So I'm
Got-
really not closing any of these myself. I'm getting in them so that they can expire.
So then, do you use that SPX playbook the same for the
I,
RUT?
I I haven't looked at it from that perspective. The only reason I started, I was already following RUD because we were doing SPY, Triple Q, and IWM. So I was still
Okay.
following IWM even though he wasn't trading it. I only went with
Okay.
Russell because I knew it was another
Cash
cash
settle.
settled index. So I was looking at it like, oh, it don't move as wild as SPX. So let me
Mhm.
start trying this. Now that you mention it though, I mean, that's something that I could work on back testing and see. But so far as the basic stuff that I've been doing in terms of like I was doing the PDT hack on SPX, that
Mhm.
works the same. You know, so some of
On
that stuff works the same, but I can certainly, thanks for the suggestion or thanks for the question because I'll take a look at it.
Absolutely. Go Broncos.
Uh, Please
Whatever.
don't get him irritated. Oh my goodness. Don't start. Don't start. Lord, Lord, Lord. Okay, what other questions do we have? What other questions are in the Hey Maria, you showed up. Good evening.
Hey, how are you?
Good, good. You?
I'm doing well, thank you.
Good. What questions do we have? I want to make sure that I share.
I have a question.
Go ahead, Tanya, listening.
So I've been trading QQQ. I've been
Yeah,
trying to concentrate on that in Google. And I got in yesterday and I was able to close both of my spreads this morning.
okay, good. Because after that
So
big massive drop, it would have went wrong.
right. And that's why I was like, I wanted to close it as soon as possible.
Yeah.
And it just went my way and I was able to close both of them.
Good, good.
But my question is if we to open tomorrow for Monday,
Yeah.
um, is it good to still look at being 75, 80% out of the money, or because of theta, do you think it could move faster and eat up so that it'll be able to be closed first thing in the morning? Because I was trading EMPH and like, remember we said it doesn't move that well, so we couldn't, it doesn't give back the premium.
Right.
So I'm just trying to see, do you look at the same, like when you're looking at the 1 DTE, do you look at the same rules for the weekend, for over the weekend?
That's a good question. That's a good question. So when I'm trading, I mean, of course, triple Q for me generally is automated by PeakBot. So it's entering with the same criteria every day. And that criteria is around the 25 or 30 delta. And then I, on Monday, am able to get out. So my answer would really be, most times I'm ready, unless something goes awry over the weekend really bad. But even then, the last time when we had that big old massive move, I still was able to get out. So I would say to stick with that same criteria and actually the days, because you're gonna take in about $50 on the Iron Condor if you're doing both sides.
Okay.
And you're trying to get out 2025. I mean, of course, the rules are to set to get you out at 5 on each side. I've kind of adjusted that to 10 on each side. If I take in 50 and I can get out with 20 or get out by paying 20, I'm cool with keeping $30.
Okay.
So I would say, yeah, continue with your same criteria. And if you're using the alerts, continue to use that. If you're using what I send you, use that. And then just plan, have your buyback order set for Monday. Same process.
Okay.
Yeah, the same process. That was a good question.
Thank
you. Good question. So Nori did ask earlier in the day if there was a way, what time are we on? So I can make sure that I remember where to tell her this is in the video, about 30 minutes into the call. So let me share my screen. Nori asked if there was a way to set the alert to let her know when her trade was getting breached, right? Is there a way to set an alert to know when your trade is getting breached? And the answer to the question is yes, there is a way. Basically, it's the same way you would set an alert for any time. It's the same way you'd set an alert for any time. I'm on the chart. Hopefully y'all can see my chart. And if you want to set, this is Thinkorswim. I believe you can set alerts in TradingView as well. I think if you're not on the free one, I think on the free one, they may or may not give you any alerts, but Thinkorswim does give you an alert. So let's say, for example, you've got a trade that's 536, 537, and price is starting to get a little close. Get a little closer. You can, when you set your trade, you can say, you can come here in this inside the chart area and right click. I always do my alerts from here. There probably is another place to do them from, but I do them from here. So I'm in the chart. I right click on the screen. And then it says down here, and there's no alert inside of inside of on demand. So let's turn off on demand and go to the regular charts. Ain't no alerts in on demand. Anyway, you're here inside of your regular chart, right? They might even have them in this sim. I would not be shocked if they did. Come down to where it says create alert, right click, come down to create alert. And if it's at or above, you can pick your strike. If 537 is what you're concerned about, or 530, 680, something, whatever your sell leg is going either direction, right? You're going to want to put whatever number so that you'll know when it's getting close, at or above 536.80. You can put a note here if you want. On the desktop, you can write a note. If you're on the app on your phone, you can't really write a note, but you can still set the alert from your phone. I've not found out where you can write a note, because I would like to be able to do that, to be able to write your notes. So at above 536.80, you can say, call credit spread strike is in jeopardy. Whatever you want to say, that says your call credit spread strike is under fire, right? They do give you the opportunity here to say, how do you want to be notified? Do you want to be notified with a sound, a text message, an email? What do you want? Push notification? You can pick the different things here, which I don't usually change this. I just leave it as it is. And then we're talking about options. Now you want it set now, specified, don't expire. I don't really bother this stuff down here. I only put in the stuff up here for the alert. I think here you can go with mark, bid, ask. I stick with the mark because I just want to know, where is the price? If the price is at 536.80, that's what I'm looking at, right? And then you set the alert, you create it. If you were doing it for a put credit spread, say you had 533 as your put credit spread. Let's see where we are. Where is the price currently? Current price is around 534 some change. Maybe 534 was your strike. You can right click again, create alert. And you can say, okay, if it's at or below, you can change this with the drop down box, at or below. Let's say you're concerned about 534 because that's your strike. You can say if it's at or below 534.30. Pick some random, I'll say random, but whatever number you want. 534.50 if you want to know how close it's getting. At or below that, and you say put credit spread is being challenged. Okay. That lets you know what's going on. So when the alert pops up, you won't feel like, because I get alerts on my computer, on my, platform, and I'm like, what was that alert for? So if I didn't have a note, the note is all in the alert, and I have mine sent to my text messages. So that way, when it alerts, I can read, and the text messages stay there, because on the Thinkorswim, when the alerts pop up, they go away. You can go, I think, in one of these and be able to see the old alerts, but I just get the one on my phone. That way I can go back into my text messages and see the alerts with the note. Okay. Questions about how to create alerts. And you can do alerts for all kinds of stuff. If you got an alert and you want to, if price gets to a certain place, this is where you want to enter your trade, you can do that. You can set the alert that says it's gotten where I want to go. Now I can exit my trade. You can set it for that. You can set it for all kinds of stuff, okay? Whatever it's going to be convenient for you that you need it for.
I do have a suggestion.
Yep, go ahead.
If you're going to set the alert and you're worried about being breached, I would suggest that you pick a price before your actual strike,
Yeah.
so that you're not getting the message after it's breached.
Right. True.
So you want to give yourself some time if you're able to maneuver or something like that. So
Yep,
make sure you give yourself some kind of cushion when it comes to that.
absolutely. I agree with that. I do agree. I thought there was another question. Nori asked that one. You had your question. Was there any more?
I have a question if everyone else is already gone.
Mhm.
Okay, so I was playing in my account today, like just I did in the paper trade account, I did the same trade. It was Adobe, same strike price. I bought a put and I noticed that you know, um, when I bought two contracts for one and then three in another. I noticed that the one that had the three contracts was in profit faster than the one that had the two contracts.
Hmm.
I'm trying to go through and see, like, kind of comparing just from my knowledge, what were the distinct differences. And the only thing that I think that was really different because the mark and the premium went up by the same amount in both trades, right? So, but it was, different premiums because of the time, but they went
Right.
up by the same number of points. Only difference was one was at like around three, no, three. It was late in the day again, playing in my account, paper trading account, and then one was at um uh like 240. So that was only there, and the one that had the three was at 240 entry time, and the one that was shit I would have thought been in profit as well was the later one at 3 o'clock. So it was about 26, that difference in time. What I mean, I'm looking at data. I've looked at just comparing all the Greeks just for kind of like my knowledge of what would be that drastic difference, especially since the one that had lesser contracts wasn't in profit. What other I guess what else would cause that big difference?
What did you pay for each of them?
Um, so the one that was bought, I'm looking at the account now. So the one that was at 240 with the three contracts, the premium was 685. And this was just I just bought a put, I didn't do a spread or anything.
No problem. Yep.
And then the other one, um, that was the two contracts, and I just bought a put. That one was 760.
Okay. Somebody wants to join us.
And they're both like one DTE. And
Okay.
I thought it was odd. Like, so I was just practicing, entering, and then I thought it was odd, right? Like, because I would
They're at
think
were
that,
they the same strike?
yes, the strike price was 565.
Okay, so it's a 565 put. Right, y'all know this thing, this blackboard, this new whiteboard acts all crazy. Okay, so the main difference is you paid 685 for one and you
Mm-hmm.
paid 760 for the other.
Mm-hmm.
So as price started to go down, maybe what was 5.565? This is for today. Let's see, what is it worth right now? The 565 put for tomorrow?
Yeah, it's for tomorrow. Expires
Okay.
tomorrow.
565 put for tomorrow is currently worth 1015. 10.15. That's what it's currently worth right now. Right? I think I'm looking at the right thing. Is that what you can see?
I'm going back to that screen.
Okay, so if you're on the option chain, looks like the 565 put is worth
Okay.
I'll show it here, that way we can see it. Okay, the 565 put, looks like it's worth
Yeah,
15.
yeah.
Okay,
Mm-hmm.
yep, so it's worth $1,015. Let me go back to, where's my share screen? Okay. Share. Back to the whiteboard so we can draw some more. Okay, so on this, it needs to populate back with the same stuff I already wrote. Are you empty for real? Did you just empty out for real? Did you do that? I don't know a way to go back to what you just had on there, so I guess we'll do it over. Okay, so you paid 685 you said for one,
Yes,
and you paid 760 for the other.
yes.
Okay, and they're both currently worth 10.15.
Mm-hmm.
Okay, so let's look at it like this. I paid $6. I paid $6 for ice cream, and then I turned around and sold it to somebody for $10.15. What's my profit here? 10.15 minus 685, $3.30. Okay, so we've got 10.15 minus 685. Sorry for how janky this whiteboard is. I need to go back to like the old version. I do not like this one.
Zoom is doing way too much.
Yeah, I need retro. I need retro.
Way
Like,
too much. I'm trying to make my screen bigger and I'm writing on the screen.
right. I
No.
need retro writing. I'm not sure what this is doing.
I'm on my phone and I can't see.
You writing on my screen. I see you.
I'm trying to make it bigger.
You try to make it bigger.
Yeah, and it keeps turning on this thing to write. Okay.
So 685. So 10.15 minus 685 is 3.3.
Mm.
Okay, which is the same thing as now this profit is $330, right? Times whichever number of contracts. I think you said the first one you had 3 contracts.
Yes, I did.
Okay, so 330 times the 3 is gonna give you $990 for that one, right?
Mm-hmm.
So for the second one, you paid more for this one. Okay, so you went to another vendor and you bought some more of the same ice cream, but you paid more for it at that next store.
Mm-hmm.
So now we're gonna see 10.15 minus 760. Right, this is like $2.45 or something like that. Let's see, let's make sure we get good math. 10.15 minus 760, and I'm really sorry for how I look like a child. Doesn't know how to write. So this is $2.55. Okay, times your 2 contracts. 10, 11, okay, $510. The reason this first one got into profit quicker is because you paid less for it. So once the price moved on down to 10.15, since you had paid less, as soon as it surpassed 6.85 in value, then this one was in profit. This one wasn't in profit yet because potentially price hadn't gotten to 760. So along the way, price was falling. The value of that contract got to be 685, 695, 700. Then this one would have been in profit, but this one not yet because you hadn't surpassed the value of this one yet. Does that make sense, Maria?
Yeah, that makes sense from like the whole like, and I was thinking about it from that perspective and thinking about the break even as well. I guess I
Mhm.
just I didn't imagine that it was just one contract, that would make such a great difference or take it that long to get in profit.
Yeah.
It was making me think I was missing a component in my math,
Yeah.
like
So
that
it's
was
not based
affecting it.
on, the number of it's not based on the number of contracts per se.
Mhm.
Okay. So it is kind of, because once this got in profit, because you had more contracts, if this just got to 690 or 695 and you were $5 or $10 up, but then you had 3 contracts, that's automatically $30 in profit. Right? So you really could have been, if you, let's say the price of the contract was at $7, then this is 15 cents or $15 different. And because you had 3 contracts, right, that's going to give you the $45 is going to be your profit. And because $7 here was between 685 really means it's 15 cents or $15 in profit, right? And you got 3 contracts, so you're up to $45. Well, this second one here hasn't reached profit yet because you were only at $7. So it's still down $60 or really down 120 because you got 2 contracts. Right? Then once we got to $7.60, then this one is now would be at break even, but this one is like $75 times 3. So
Mhm.
it's at 200 and some change because the value of the contract is 760 and you've got 3 contracts. So 760 minus the 685 is going to be about $80 times the 3 contracts. So that's going to make the money be bigger with more contracts. This is why you'll see people who will put on a lot of contracts and and be excited about a small move. Because if you have one contract and it moves $5, then all you're making is $5. Right? But if you've got 10 contracts and it moves $5, then now you've got $50. It didn't move anymore. It's just you got more weight behind it, basically. You do 20 contracts, it still only moved that same 5 as far as the price of the contracts. But now you've got $100 in profits and the price hasn't moved anymore. But because you got more contracts, you're going to make more profits.
Gotcha.
And
Yeah,
that's
that
why,
makes sense. Huh? Gotcha.
no, I was gonna say that's why earlier when I was talking about with Russell that I wanted to feel comfortable scaling
Yeah,
for the month of September.
absolutely.
This is exactly what I was talking about.
Yeah.
Because I'm
Yeah.
like, my target price is always going to be $45.
Mhm.
I'm accounting $5 for the fee. So
Mhm.
basically my quote unquote take home would be $40. But
Mhm.
I don't want to have to do more than $40. But I'm fine with, increasing my contracts for
Yeah,
this
multiples.
right here. I
Mhm.
only needed to move, $4 or $5, and that's
Mhm.
it.
Yep, exactly. So that's where you'll see, I think I mentioned before something about TJ telling me that if I believe in a particular thing, then I need to put weight behind it. He said,
Mhm.
okay, if you believe that it's going to do a $1 move or a $2 move, if you believe this, but you only do one contract, then you're going to get one contract worth of profits. But if you do 3 or 4 or 5 contracts, then you're going to multiply those same profits by multiple. You don't need it to move as much. Now that goes both ways. If it moves in the positive direction, you're making more money. But if it moves in the negative direction, you're losing money faster too. So that's definitely a 2-sided coin.
Okay. Yeah. Thank you both. This makes sense. I guess maybe I was just overthinking of it because I was thinking, okay, maybe a number of contracts affects the
No,
Greeks and theta or
no,
something like
that's
that.
not the
But
piece. Really,
I was
what
overthinking it.
the biggest piece here is how much did you pay for the contracts? Now, if you had paid the same amount for them, then they should
Mhm.
have been the same. But since you paid about a difference of about $75 between these two, then that's why you have a difference.
Thank you.
You're welcome. That means price had to move further for this second one. Price had to move more in order to get you in profit. Okay, now that we're talking about scaling, that's a good thing because when you're any strategy that you're doing, you want to be able to get comfortable with that strategy doing whatever it happens to be. Let's say for that QQQ we're talking about. If you got a QQQ strategy and you know you want to keep $25 off that iron condor each day, well, times one contract, right? We're talking about just $25. But if you're ready to scale it, you start multiplying by 2 contracts. Now we're doing the same thing every day, but you're taking in more money. Times 3 contracts, doing the same thing every day, but you're taking in 3 times 25 is 75. I'm trying to jump to 150, right? Same thing as you scale it up. So you get good at that strategy on a small scale with 1 contract, 2 contracts. Then you scale it on up to where you're doing the same thing every day, but then now you're taking in more profits. That's why you'll see people who will put on contracts and then they'll have stuff like, 40 contracts, and you're like, what? Do what? Right? And then this is $1,000 that they're pulling in each time they run that same strategy that here will pull in $25, but you put more contracts on it, it pays more money. It's doing the same thing, it's just doing it at a bigger scale.
Listen, once you start doing 40 contracts, your soul got to be anchored in the Lord.
Don't it?
Because
Don't it though?
because when you see that thing going against you, there's no way in the world you don't have no panic attack.
Yes. This is
My
why
goodness.
that's why you are really serious about that stop loss. Because your strategy then has, I'm trying to erase all this. Your strategy then has a plan for how do we exit these when they don't go our way. I need a new page, or I need to clear this one. I don't know how to erase on this little jobby. Shoot, I can always just go out and come back in. It likes to just erase your stuff.
That's
Uh,
what,
I have the drawing tools on mine.
What drawing
Nope.
tool?
On my version, on my side, I see drawing tools on the left-hand side.
Mm.
You don't have like a
I have
list.
drawing tools. I just don't see one that says erase the page.
Oh, erase the whole page. Okay. I don't know. I didn't realize you was there's a oh yeah, because I see just a garbage can, but I don't see nothing that's like a
I
the
do
whole
see. Yeah, you can. The garbage can may be the way to, there we go, clear page. The garbage can works fine. Thank you, Jamie.
Mhm.
Okay, so let's talk about stop losses. Especially for you, we can talk about it for, we can talk about it for buying and selling. Of course, the 2 ways work a little different because the buying stop losses is going to be dependent on technical price movement or your risk tolerance and how much a percentage do you want to lose. So if you, when we think about, you may want to buy, maybe your stop loss place at a buying contract is 50%. With your 50% down, then you're closing, that's your like stop, like I'm done after this. This is for buyers, right? But this is a percentage based, but you also should have one that is technical analysis based. And when I say that, you're looking at your candle patterns to see where is the reversal. Do you have an engulfing candle that's a reversal that lets you know that it's turned around? So you also would look at, for those who are we've done some candlestick stuff, and we will do more candlestick stuff in September, where y'all saw that we're doing the charting challenge next month. It's for the membership, and I'm marketing it. There we go. Marketing it in order to bring in more people into the membership. So suggest to people if they want to learn charting that they come on and do that. Join the membership and get all the benefits of the membership versus doing stuff separate. All right, so you may want to look at reversal patterns. And Jamie, if you are on your PC, maybe you can put the graphic that shows those patterns at the bottom of our telegrams. You can put that there, because if you're clear and got a good understanding about reversal patterns, you can kind of see when is your trade going to start going against you as a buyer, right? You can use the 50% down method or whatever, 30%, 20% may be your amount, 50. Some people can't handle a 50% drawdown. So if that ain't comfortable for you, then pick something else, whatever percentage. You just don't want to you want to keep your stops tight, but you don't want them to be so tight that you're always getting stopped out. So they have to be based on something, right? It can't just be based on the money, because options are weird in that they will draw down purposely to stop people out and then run it the way you want it to go. So you gotta have a plan that's really more technical based, but you can say my max loss on any trade is 50. If I've lost 50%, I'm out, right? Okay. Or you can use the reversal patterns on the candlesticks. Okay, I think this method probably is a better one. Especially if you are reading charts and you know what you're doing with the chart reading and candlestick patterns, reversals, then you're going to have a better chance of, should I get out here or not? All right. This is for buyers. That was the buying side. If you were buying contracts, that's what these two are for with the buying. Now, if you're selling, boom, 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 which most of us are sellers, but I realize we have people here, me included, who do some buying. So you have to have strategies that go along with your buying. Now we're with selling. Okay, with selling, you get into a trade, you take in a certain amount of premiums, right? I'm going to go with a $40 premiums. A lot of stuff don't pay $40, but iron condors do, and that kind of thing. $40 you take in premiums, right? That means you got into your trade and you received $40 in premiums. This would be $40, I think, would probably fall in the iron condor category, because you're not going to pull in $40 on one side. This is going to be an iron condor. Everybody knows. Who doesn't know what I mean when I'm talking about iron condors? Who doesn't know what I mean? Dina, you may not. I know you're new, so you may not know what I'm talking about. Anybody else not know what I mean when I'm talking about iron condors?
I know what you mean. I haven't done that yet. So.
Okay, but you
But
know what I mean.
Yes,
Cool,
ma'am.
cool. Enjoy yourself, Leslie. Oh, I think you left already. She was going to class. Okay, so $40 in premiums for your iron condors. You're setting your stop loss, or whether it's a physical stop loss or a mental stop loss. For me, I'm setting my stop loss on an iron condor at 1.5 times whatever premiums I took in. So who did that? Because that wasn't me. Somebody decided they was done looking at this and wanted to delete it.
Did what?
Deleted all the stuff that was on my screen.
Oh, that wasn't me. That wasn't me.
I don't know what happened, so let's just write it again. Okay, so let's say, for example, we've got $40 we took in premiums, right? For our stop loss, I look at 1.5 times the premiums I took in. This is what I'm trying to stick with, because it's really better if you have it as a hard stop loss and it's already put into place, because that way you don't got to worry about making the move yourself, because sometimes it's hard to make the move yourself. Okay, so this is $40, and if you're doing your math, $40 times 1.5 times 1.5, which should equal $60. I am struggling with how bad this looks, by the way, in case y'all were wondering. I'm struggling with this. 40 times 1.5, which is $60. if the premiums get to 0.60 total overall on my Iron Condor, this right here is my exit. I might go up to 80. If I might double it. So 2 times your premium if I only took in $40. 2 times the premium is 40 times 2, which is $80 is what I'm gonna pay to buy back. That means I'm gonna give them back the $40 they gave me, and I'm gonna give them 40 of my dollars, right? Because they gave us 40, they gave me 40, so I'm gonna give them their 40 back plus $40 of mine, right? That means I'm gonna be basically at a $40 loss with this situation, $40 loss out of my pocket. Up here, I'm going to be at a $20 loss. That's what's coming out of my pocket. Okay, do we understand how I came up with those numbers? I'm going to show you in a minute where do we put them, but I want you to know how I'm coming up with the numbers. Yes, we cool? Okay, this was an Iron Condor, I said. Now, what if we only did one side? Let's say we only did one side and we took in $20 in premiums. Maybe you only did the put credit spread or the call credit spread. You took in $20 in premiums, right? For me, my stop loss, I try to do this, would be either 2x or 3x. Two X or 3x your premiums. Okay, so this is 2 times the 20, which means if it gets to $40, I'm gone, which that's a tight stop, but if that's a way to make sure that you don't lose any more than $20. Or you can do 3 times the 20, which is $60. In this case, I'm at a loss of $20 because I'm gonna give them their 20 back and they're gonna take 20 of mine. If you do 3 times the premium, then this is gonna be negative $40 because you're gonna give them their 20 back and put 40 more of your money with it. Okay? Anybody got questions about determining your stop loss? Now you can, this is just money-based stop losses. You can, now the good thing, let me clarify. This is a money-based stop loss. But even though this is money-based, it's based on the price because the proximity of the price to your strike price is what's going to make these premiums be higher. So it is proximity of price based along with price, along with, premiums. The thing is, just because it's dancing around your strike price doesn't mean your trade is not going to be fine. So you do also, in my opinion, want to couple this with charting because you do still want to be able to look and see what is the price doing. What is price doing? How close are you to expiration? Is it trending in one direction? Is it showing the candlestick patterns that may be reversing? Is it giving any reversal energy? And if it's not, you definitely would want to say, I'm out. If it's not showing or acting like it wants to reverse, if it's on a trend going and it's trending chug, chug, chug right on towards your strike, that's when you're like, this right here ain't gonna turn around. So I need to just go on and save yourselves. Need to save myself. Okay, partner it with charting. Questions so far? Nope, then let's share and look at it on demand.
I did want to say that I've been trying to learn this lesson for a few months now. And today, well, not today, but this week, I finally got it right. Like I had I'm going to stop at 3 times my premium, but for some reason, I kept telling myself, it's going to turn around, it's going to
Yes.
turn around. And
Yes,
every time I got to max loss, I'm like, you were supposed to get out. And I finally, I had charted where support and resistance was, of course, but then I also charted where if it gets to this point, and I think I had said 426 or something, whatever the price was, when it gets here, it's just going down. It is not going to turn around.
right.
And that was one of the things that made me get out, because I
Yeah.
had determined, looking at the chart, like where I thought if it goes below this support,
Yes,
it's gonna
yes,
keep going.
yes.
And that like clicked in my head. I'm like, oh, I'm at the support and it's going below the support, get out. And
Yes.
it saved me from max loss.
That's absolutely it. When we put support and resistance on, if it does not respect those levels, that lets you know that that's your opportunities, right? So that's chart based. That's chart based stop losses, chart based exits, because you're like, if this doesn't respect the support, doesn't respect the resistance, then I got to go, because it's going to keep falling. If you don't see it bounce back or reject those supports, then that says my trade is in jeopardy. I'm not gonna sit idly by and yeah. So it sometimes it's difficult, especially if you're looking at the money. If you're looking at the chart, you got a better chance of getting out. It's when you're looking at the money that you struggle, because you're like, if I close this right here, I'm gonna pay $75 or I'm gonna pay $60 to get out. What if it comes back? If that's all you're looking at is the money. But if you're looking at the chart and the chart says this right here is not going nowhere, it's gonna keep going. Like today on Triple Q, it paused a bit, but it kept right on moving. It kept right on moving. Keep on moving, don't stop. Yeah, it just kept moving.
Guilty as charged.
Oh, I know. Who you? I'm guilty. That's why I can talk about it with such passion.
I
That's
figured
why I
out
can
why.
talk about it. Go ahead.
I figured out why, man. Why I be smoking so much opium.
Why?
Because I feel like a failure when the trade
Ah,
doesn't go my way. So it's kind of like, the hope
Yeah.
that it'll go well.
yeah.
Reason why.
Yeah.
So yeah, no, I'm at the point now where it's like I'm trying to be.
That's very introspective. That's very introspective, because honestly, this is the way that we get the emotions out of our trading. The trade says that our trading plan should say, I'm entering here. I'm exiting when it does this. And if it passes this particular place or this particular price point, I'm out. That way there's no emotion to that. You got rules that you're gonna follow, and these rules happen all the time. And I totally can understand and agree with what you're saying, because when my trades don't go right, the first thing I say to myself is, you know too much to have a trade getting breached. Like I'm somebody's god. I'm like, well, yes, I do know a lot. Like, how do you pick strikes that don't work? Well, people do. But I'll jump all over myself, like, like you said, I feel like a failure or whatever when it doesn't go that way. I'm like, well, how'd you do this? Then you look back at the chart and you go, now you saw that chart was showing it wasn't gonna go back.
I think also, I know I'm a person that's like I like to have all my ducks in a row, and I'm used to things going well
Yeah,
when I have my ducks in a row.
yeah,
And so when you trading, it's like it don't even matter how many of your ducks in a row if the volume decides to go a different
right,
way.
right.
You
Or
know,
if something, or some catalyst happens,
or
some catalyst
yeah,
happens that makes it drop.
changes,
Yeah,
some random announcement, like you can't, that's
yeah.
the stuff that you can't control. So
True,
I'm working on
true,
getting past that.
true. So here we are. This is what triple Q look like today? It fell, it paused for a minute, paused for a little while. I don't think I have, do I have my, I want to have it on my pivots, my chart that has the pivots on it, but it gets to a place where it may stutter around a spot, and you watching it, see how it rejects or how it responds at a particular place. And if it don't do right, you're like, well, this right here didn't work out. And then you're looking at your chart. Well, we take time to look at our charts, right? So let's look here. This is today. Based on our support, we saw here that we had support from back here, right? We had support 2 touches, boom, boom, it touched here. So 3 touches we've had, actually 4 if you look at how it crossed here. Once it got down to that same support area, it kind of danced around a bit, but it closed below here, right? It closed below here this time. Then it went up and then it closed below here again. This is the 30-minute chart. Once it closed below, honestly, the first time it closed below that support, depending on where you were, you need to know it's either going to keep going this way, or if you got a trade down here, your trade is in jeopardy, right? Depending on how close you are, your trade is in trouble. There's another support down here at 475, but it's going to depend on where's your strikes. But once it closed below this resistance, showed that it did not respect that support. It blew right on through it. It looked like it wanted to respect it here on this second candle, but then this next candle didn't go any higher. It basically was in the same place. Let me make it bigger so y'all can see. Oh, come on. Trash, 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 trash. Let's go here. I'm trying to drag it and it's drawing pictures. Come on, machine. I need it on the bigger screen. But this is right here at the support, the 479.17, right here in this area. It closed below here. Then it tried to go back up, not much. It couldn't really get any higher. Then it opened and went back down again. This right here was clear notification that we were going down some more. All this right here said, I'm going down. That's what that said. This support can't hold me bound. I'm going on.
And when I go back and look at my trade, and I'm kicking myself like, that's exactly where you should have got out.
Yeah.
But I think I would like to also concentrate on the reversal patterns.
Okay.
And the continuation patterns like
Yeah.
that Jamie pull up, because I
Yeah.
think that would be just one more tool that would help me see where price is going.
I totally agree, because again, the more things we don't use those things to help us with entry. This is what one of the things TJ has taught me, is that we don't use indicators for entry. People use indicators like the RSI is here, here, and here. I'm gonna enter here. TJ's like, no, you don't use indicators for entry. You use price action for entry. You use indicators to confirm your trade, your direction, to tell you when to get out or when to add, if you're going to add to it. Indicators are used for trade management. They're not used for trade entry. So looking at candles, looking at those things are going to tell us, okay, I'm in this trade already. I did all the things I'm going to do to help me get in this trade. And now that I'm in it, I need to manage the trade. And the management comes by way of candlesticks, by way of patterns, by way of moving averages or RSIs or Bollinger Bands, whatever it is you're going to use. You use those after you're in the trade to help you manage it.
That makes sense. Wow. Okay.
Yep, that's how we do. I think I saw somebody with a chat comment. Let's see if that was, oh, this was the thing. Did you put it in the Telegram too, Jamie? I'm sure you did, because that's what I asked you to do. And you're
Oh, it's in all 9,700 groups.
Listen, English. Don't even be talking about all the groups we got. Okay, so now we're looking at it on the chart. Again, we can see that sometimes we see the stuff that lets us know that we need to make our move, right? I wanted to say, remind me, Jamie, don't let me end this call without talking to you about previous day high, previous day low, and all that stuff, when to put those things on your chart when you're doing your RUT. And it's for everybody, not just for you, but when you're doing your zero DTEs, you need to have a few more lines to make sure that you know where price could go and what could be not just our regular support and resistance, but you can use previous day high, previous day low. You want the open of the day, and you want some pre-market. You want a pre-market zone. Okay, make sure I mention it, that way I'll give you all the right things that you need to also put those on your chart. So that way, when you're doing your zero DTE, you know where price could make moves. Okay, not just you, but everybody, you.
Can you repeat them all again, please?
They're gonna be previous day high, previous day low, previous day close, opening range, which is the 15-minute, if you're using 15 minutes, 15 or 30, depending on which one you're doing, and pre-market low and pre-market high.
Thank you.
Previous day high, previous day low, previous day close, pre-market high, pre-market low, and opening range. Some people just use the open place, you know. Some people just do the open place, but the opening range, I know because many of us use that opening range, then you should use that if you're using 15 minutes or 30 minutes. Up to you, 15-minute or 30-minute. We'll talk about how this all matters if we want to talk about it more, but that's what they are. Previous day high, previous day low, previous day close, pre-market high, pre-market low, and the opening range. Okay, those are going to act as pivots, could potentially act as pivots. All right, so I was going to talk about how do we put on a stop loss? How do we turn it on in here? All right, so let's say it's 12 o'clock. It doesn't matter what time it is. We can go ahead and go with right here, because of the whole point I'm trying to do is make sure that we turn on a trade and then we can turn it off. All right, so we're here, triple Q. I'm going to put on just one side at this point. I probably would go with 443, 444. Oh, I didn't pick anything. Trade. 443, 444. What are we doing? There we go. Don't like that money. Let's go. At this point, we're just picking a strike so we can see. Why is that showing? Nope, this is the wrong one. You got to make sure you watch for those weeklies when you're doing that. Change it to single, life, 443, 444. Okay, we're going to pay $18 or $20 at this point. Okay, we paid, it looks like it says $19. That was our triple Q trade. We paid $19. Y'all ignore these 4 with the zeros. We paid $19 for these. We want to put on a stop loss for 2x or 3x. Let's go with 3x, make it $60. Okay, we're going to put on, boom. We're selecting just like we would our close order, except for now we're putting a stop loss. Or we're going to say close it if it gets here, basically. 443, 444. I think we're going to need to do one of those dual, like a OCO or some dual action. Gotta do dual action. Basically 443, 444, you're gonna close it if it gets to 0.6. And I don't know when you, if it's up here, do you call this then a stop? Stop limit? Jamie, you can speak up whenever you're ready. I usually put in my close order where I want it to be, and then I watch it in the working so I can see where it's going. That's how I manage.
For me,
Do what?
repeat the question.
I was putting on this stop loss for this spread. When you do that, you put in stop limit. Do you put a stop on yours? I know you don't really now. You do PDT hacks. Stop limit at the mark. I think this is what it is. But I also want it to be the duplicate order. So, I do not want this to be confusing. Create duplicate order. It needs to be that OCO. First trigger.
Oh, yeah, yeah.
OCO. Isn't that what it is? First trigger OCO?
That sounds right.
Why is it not popping up another box for me?
Because I'm not, okay, so this third line is what? Of the green
Right,
ones.
it's showing mark. This is the limit. Oh, come on, this is not how I do mine, which is why it's getting confusing. If I wanted to close the way I want, I would go with 0.05, which means I'm closing it for $5. This, I don't know if this is gonna show as a first trigger OCO, though. It's 2 duplicate orders.
Hmm.
It says first trigger OCO. The limit stop or there. Let's confirm and send and see what happens. See what it looks like up here. Okay.
That must, I'm assuming that's it because I see that, yeah, by your mouse on the spread trigger that I had the # 21.
Mm-hmm.
On the second one, that's usually what I see for the bracket order. So
I want to make sure it's going to trigger. I'm putting it on a bigger screen so that way I can make it bigger for everybody. Because now it's looking kind of small for me, and I know it's probably looking for small for y'all, especially if you're on your phone. My mouse is disappearing. Oh, there you are. If y'all
but it
got
looks like on your order, your stop and your limit both had the price of 0.60.
yeah, I see that. That's not what we want. We want this one to say,
So I have a question. Have you tried the stop on Robinhood?
I have not.
Oh.
Have you?
I have not, but I have been told by someone that it doesn't work, which would not surprise me. But
This one says 05 and this one says 60. So now this one says it's working and this one is waiting. So it's waiting for the trigger. So maybe this is it. The
Can't
both.
see what you're looking at there.
Oh, sorry. I didn't change the screens. Pardon. There we go. Okay, so now what you see I have is the stop, $60 stop, or the 0.05 limit if it gets down to 0.05. So it'll kick, one side should kick in as an OCO. For me, what I do is I put in the order that I want it to close at from, for the amount that I want it to be. And then, like here, I would want to close it for this 0.05, and then I watch the mark box. Periodically, I glance back at it to see what is it showing that it's worth. And as it starts that moves around, I'm looking to see, is it coming down? Is it going up? What's going on? Right? And then if it starts to climbing and doing its thing, then I go and look at the chart to say, what's the price actually doing? That's how I do that. Now, this is just 9:59. Let's get us another time. Maybe we move ourselves forward to 11 o'clock or something. Okay. So that's the way you're going to set your stop loss, to where you want to put in place that says, if it gets down to where I want it to be, I want it to close. But if it goes up higher than I want it to be, I also want it to close. I moved us forward to like 11:59 so we can see this mark box. Remember, mark is the box that it's currently worth. Mark is the current worth of the trade. And that's why I put it here, so I don't have to keep doing the math between these two boxes over and over all day long. If I put my order in for what it's worth, I can see here. I mean, if I put what I want it to be, I can see what it's worth all at one glance. And it's pre-buffering. It needs to come on. Okay, so it's currently worth $11. I want 5. I want to pay 5 to get out. It's currently worth 11 or 10, 11, something like that. Who's got questions here?
I have a question that may be related to this.
Okay.
May not be. When we do an order cancels order, so let's say if I'm in let's say if I'm thinking in terms of like the PDT hack. So let's say I'm in a trade. I just got into the trade. Let's say I got the $90 credit or whatever. Now I got to go on the opposite side, invert the legs, and I'm going to have to put in what I want in terms of, add my profit to the risk. Okay.
Right.
So I'm going to have to enter the trade. So on that other side, I can put in an order for my stop loss, okay, to be on the safe side, right? But can I do an OCO that would say, essentially do an OCO so that I can add an amount for my stop, let's say 2 times what I took in, and then the other part of that bracket would be the amount for my take profit. You can't do that?
Take profit, the amount from that other trade, from like the put credit spread side or whatever, from the other side?
So basically side 2 would have one bracket saying 4.55, because that's the amount that I plus my take profit. And then it would have whatever 1.80, because that's what my
I understand what you're saying. I don't know. That's something you'd have to see, because will it take a put credit spread order and OCO it with a call credit spread order?
right.
Yeah, I don't know. That's worth trying out inside of your think or
So you haven't heard of it being done like that?
I have not.
I didn't think so. I haven't either. Okay.
I have not heard of that.
All right.
I have not. Let's see. I'm not sure if this draws down enough on the same day for us to see. I might have to, because I picked the next day as our expiration. So it may need to go to the next day to see if it draws down enough to catch this order or not. I mean, from what we can see, it looks like it's going in the right direction. We received 20 and now it's worth 14. So at this point, we will be $6 in profit. It's kind of dancing around at that spot. So that's not, at this point, it's not going to close on that particular day. 09 on the 13th. See what's, oh, you know what? It was on a GT, it was on a day, it was on the, good just for the day. So as soon as the day was over, it canceled it. Well, at this point, it looks like it got filled. Oh, no, it's still there. What are you doing? 09 51. The ones are still here. It was only a day order, so we needed to put good till canceled. Otherwise, it wasn't going, it would disappear at the end of the day. Let's see what kind of value we have on it right now. It's worth $2 now. Right click, create the closing order. And it's worth $2. Okay, so we could, of course, confirm and send. So you can do as Jamie says, order cancels order, OCO, first trigger OCO, which basically says whichever one of these things triggers first, then that's what we want. Whichever order triggers first. Or you can do, you enter the trade and then you put in your closing for what you do want. And then watch if in the working area, which Robinhood's working area is not like ours either, because when I have Robinhood trades, you can, with the way they show it on the side, you can't really tell real good what the status of your trade is. It tells you in that box over there what the stock has done for the day. It does tell you the worth, what it's worth in that box over there. So if it's worth 0.07, it'll tell you that part in the box. But that don't necessarily mean I remember what I put in for my close. So it's not quite the same.
That's how I monitor mine. I have to remember what I received, and
Right.
then I know.
Exactly. That's the way you got to do. You got to remember what did you receive, so that way you'll know what it's worth at the time. Like I have an Exxon trade going in my Amazon account right now, and the put credit spread is worth $5 and the call credit spread is worth 13. Well, I received $30 for it, the total iron condor, and I want to close it around 15. Right now it's worth 18. So I gotta wait, give it some more time. That's the only way you can see in Robinhood.
I'm in Exxon too.
Are you?
End
Look
up
at
in
you.
the same trade.
We're probably in the same one. 112, 113, and 117, 118.
No, I got in mine later, so my strikes. I couldn't get that 117, 118.
No.
I'm in 116, 117.
Okay. Okay. Did you take in a full? Hopefully you took in $30 or something around there.
No, and I didn't dollars because I didn't get in until yesterday.
Yeah. Oh, okay. Yeah, I got into mine the other day, a couple days ago. I guess I can just share from here. So I want you to see what it looks like in Robinhood for those who are Robin. I know Lisa. Lisa, you still here? I know Lisa's in.
Yes, I'm here.
Okay, good. This is the way it looks in Robinhood, and it's on your phone or on your app. So mine says this Exxon trade is currently worth the $5 over here.
You're not sharing it.
I'm not sharing.
Yeah, we can't see it.
Gotcha. Okay, let me get the right screen. Sharing the wrong one. Thank y'all. So the put credit spread trade is currently worth $5. which is what I set the close order for. Robinhood don't be trying to close them spreads too quick either, by the way. And the call credit spread is worth 13.
Not at all.
I have
Not
my close order is in for 5, and 5 is my close orders. And this one should have triggered, but it didn't. But that lets you see what the value of it is at any given time. So in this particular trade, like I said, I took in $30. You know, I received 30 in premiums. This is my plus, and I'd like to close it when it's worth 15. Around 15. Well, 5, well, you know, I said 15, but if it gets 5 and 5, I'll take it. But it's dancing in the middle, which is fine. It's doing its thing. Exxon is showing itself neutral, but I got bid on that last week. I thought it was gonna keep drawing down, and then one of those days it picked up, got onto a horse and went riding and took my trade with it. So if this total thing here gets to be worth 15 or right around 15, your girl gonna be gone. Take my $15, $20 and run. Okay. Questions about that? Lisa, what else you need to know from Robinhood? Anything else you got questions about?
No, I'm kind of getting the hang of it, and like Talia said, I just go from what I receive, and then
Yeah.
I remember what you said, at least 10%, and then I try to get out.
Yep. Get out around 50%. So if you take in 30, you know, then you want to exit for 15 or less, right? If you take in, you take in 20, you want to try to get out total for 10 or less. You know, good thing about Robinhood is the fees aren't there. You have to pay all them extra fees like we do on Thinkorswim. Try to take in more than $10. You take in 15. I usually close this for 5. If I take in 15. But I've looked a lot more recently at trying to do more iron condor so I can use that same collateral for both sides. See here, we got a put credit spread and a call credit spread. That's an iron. This is the iron condor I was speaking of. When you have both sides like that, this is called an iron condor.
Yeah, I've been trying out the iron condors too.
Okay. Yeah. Cool. Questions, anybody? We're gonna wrap ourselves up. Unless we got some more questions, we're here to answer them. Oh, I gotta go to that previous day high and low thing I was talking about. Want to make sure I show that before we exit. Okay, so if you're on your chart, we can go to RUT since that's fine. Let's do the daily candle. Does RUT have after hours? Does it show after hours? Or is it only market hours like SPX?
I haven't actually. I really don't look for it.
Okay, let's see.
Because I
it
don't
does have
trade
after
after
hours.
hours.
It does. If you go to a smaller time frame. Okay, let's look at the daily. Okay, so one of the reasons you want to do this is because the previous day high, previous day low, close, all those things are going to also could potentially show or could provide some support and resistance. Okay, that's why you want those. You want previous day high. Previous, can we change lines? No. Oh, there we go. Previous day low. Previous day close. Pre-market high. Pre-market low. and opening range. This is what helps. We already know that the opening range helps us with the breakout. Opening range helps with the breakout. So you use this information to help you once it's broken out to see where could it break out and go to, and can these other lines provide you some support resistance, okay? So we're on, oh yeah, I made it too big. Come back, sweetheart. Get to where I can see the lines. Where'd my stuff go? I guess it's up there. I have to go get it, go find it out. Okay, so previous day high. It's here. Oh, don't. We can edit the properties and type in previous day high. Okay. And then we want one here. Right click, and we're gonna say previous day low. Okay, previous day high, previous day low. Now, of course, if you're gonna do this, you can do this in the pre-market. So like now, honestly, we can work with this green because, well, I'm gonna leave the one I got because you would, for tomorrow morning, you would work with this little green one here because that would be your previous day. Right? But now we're looking here, previous day high, previous day low, previous day close. Previous day close down here. Okay. Then if we were switching over to a smaller time frame, we should be able to see the pre-market high and pre-market low. Make this bigger. Keep saying I'm gonna put my tools up there where they lock in place, but not always that lucky. Okay, so pre-market high, pre-market low. You can do this on the 4-hour chart. You can do it on the 1-hour chart. Basically, you just want to mark the pre-market high. Pre-market low is the same as the day's low. Let me look at a different time frame. I don't like the way that's looking. Why is there only a piece of a candle in the pre-market? Is pre-market for RUT only a little bit of time? Maybe it just opens up just before the market. There's no post-market. It's only a pre-market. Yes, that's fine. Okay, so previous day close. I didn't put anything on this. What was it? I call this pre-market high, which is right here. Pre-market low. The RUT only has this one little bitty candle in the pre-market. Everything else has a lot more happening in the pre and post market. And you're only looking at the pre-market, not the previous day's post market, only pre-market.
The time frames for pre-market would be
6 or whatever, for whatever stock you're working on, because this RUT doesn't seem to pick up till the morning. I'm not sure what it's got going.
well, I just mean on whatever ticker, the time
6 or
frame for pre-market
6:30.
is 6 Eastern.
Either 6 or 6:30.
Okay.
Yeah, whenever pre-market opens, I want to say it's 6, but it could be 6:30. You can tell though Like, let's say, for example, goodness. Okay, charts. Let's say we were looking at SPY. Generally, there's a break between the pre-market and the post-market from the previous day. See right here, we're on the 30-minute, right? So this would have been the Monday, and then right here it says Tuesday. This is where it picked up the next pre-market. It'll be here where it says Tuesday. You got me? You know what I'm saying? This would all be post-market, and then the next day would be here. This is on the stocks that, why is that still moving? Oh, we are in on demand. Like, I was wondering why was this not giving me why is this looking weird? The on demand is still around. Like, why is this candle still moving? The market's closed. Market's still doing its thing. I'm the one. So Monday is here. It starts the new candle. This is the pre-market for this next day. Starts right here where this line is. Okay. RUT doesn't seem to do it like this. So post-market, pre-market, pre-market where you want to look at pre-market high, pre-market low. And then for you want the first 15-minute opening range breakout. And since on demand is running, this actually is pretty good because we can actually see the 15-minute candle. Sorry for all the movement that's happening with this chart because I'm moving and the candlesticks are not, so I'm having to move multiple times. Okay, so we're on the 15-minute chart, which means this first 15-minute candle is what we've got for our opening range breakout. This is our, right, this is let me get one more. That way when I put words. Open range high. And then this can be turned to open range low. Okay, even though it's taking me all this time, it really won't take you as much, any of you this much time as this, because you're doing this in the pre-market. You're looking for the previous day high, previous day low, and you're looking for pre-market high and low, and then the opening range. You can't do the opening range until open, basically. You can't do it till then. But these things are going to show you, like in this case, this is our opening range here. See, we got our opening range. Where's my pencil? Need my pencil. There we go. This here is the opening range. From top to bottom is the range. This is the one. So once it goes, it kind of like it wanted to bump out, but it didn't close up there, didn't stay up there. It came on back down and came back through the range, which this is an indication. If this candle closes here, it's only 10:08, so we still got about 7 minutes before this candle closes. But this could be an indication that it wants to go down. What kind of candle is this for the candlestick people?
You mean as far as bearish?
No, as far as what name of it, what would it be called?
Engulfing.
An engulfing candle, right? So it engulfed that previous candle, letting you know that we're trying to go down. Ignore that. Oh my goodness, that's so irritating at this point. That is not doing better. Anyway, this is an engulfing candle, letting you know that there's probably a turnaround that has happened. This is where we're talking about candles, knowing that the candle movement means. This is a reversal pattern, right? This long wick up here means there was a lot of selling pressure, and then it turned around and started coming on back down. Chances are RUT will continue to go down. How far? I don't really know, but you know what it probably will do? It's going to be going down. You've got some support things all down here together. Previous day, pre-market high, previous day close, previous day low is all down here together. You think this is going to provide some support? I would say yes. It's going to provide some support. Will it hold forever? Probably not. But you need to know that this is another support area, or these lines will also play support for you. Okay, previous day low, if it continues on through there, the previous day low is also. Now you still have your supports and resistance that you put on from your regular charting, but these are 3 extra things that can help you through the day as well. So you'll know how far could it possibly go. So if you're looking, like Jamie, if you're looking for your rut and you're saying, I want to put on the call credit spread to lock in my PDT, or the other way, put credit spread to lock in my PDT hack, but I needed to get, let's say you needed to get to 2060 to lock in your price, but you see good resistance at 2062, you're going to be like, I need to go ahead and lock in here because it may not go all the way down to 2060 in order to lock the other side. It may only get as far as this, and then I need to lock it there. It's how you use the charting.
Lock it for a loss, you mean?
No, lock it for a profit. But let's say you're getting in and your let's say you got your, if you want your $40, but your $40 locking place, the price you needed to get to lock your $40 is here. But it may not get that far. So maybe in this area here, you could lock your trade for $30. Right? Yeah, you'd like to have 40.
I see what you're saying.
But you're like, it may not get there. Let me go and lock my profits in at something else so I can still lock in my profits, but I may not get to $40. It may only get to 30. And let me just go ahead and put my trade on, still do what I need to do and maybe not keep as much money, but my trade will be free, because what you don't want is to come here and then turn back and go on and do its thing, because it could potentially do that. Y'all got me?
Yeah, coincidentally, each morning when I go to set up the 15-minute, it just so happens that I wasn't even doing it on purpose, but I ended up marking the previous day high, low, call. I mean, I was doing some of those not for the same reasons. It just so happens that the swing points, I always mark the swing points.
Mm-hmm.
And so they would usually end up being where I'm seeing where you putting these lines.
Mm-hmm.
I didn't even think about it for those reasons, but I guess that makes sense, because I was using it for support and resistance, so that does make sense.
Yeah. I don't know. You've talked about swing points before, so you were already, I think you already mentioned it, but just that 6-line strategy or whatever, just let you know that those are places that the price could definitely make a turn. And you can use those. You can also use them if you're a buyer. You can use these same areas as, let's say the price does come down to this line, and you can use this now as a support area to say, now I'm ready to buy calls, because the price, you want to see how it rejects or how it acts at this area. But if you got, okay, it's going, we're at yesterday's low, we're at yesterday's close, and you're like, that's probably going to provide support. So you can say, how does it react here? And if it turns around and goes the other way, you can jump in calls and ride it wherever it's trying to go. If you were working in the breakout and the previous day high, which is right up here, this is the previous day high. If the price climbed up here, previous day high, you're like, well, it's probably going to turn around up here. So this may be a place where I get in and I start to trade puts. Okay, doesn't matter that, of course, another thing is this is a shooter candle, which is a candle pattern. Shooters, it's not shotters or slotters. It's supposed to be an H. Shooters, there we go. Shooters are indication of going down. That's an E. It does not look like it, but it is. Shooters are an indicator that we're going down, that we're going back down to the downward direction. That's a reversal. A shooter is a reversal candle. Okay, this one here, it's a reversal candle. And what did it do? Reverse, crisscross. It did just that. Okay. I don't know if Shooters has 2 T's. I think it only has 1. That is not looking right. I think Shooters only has 1 T. Yep, there we go. I'm a very good speller. That does not look right. Okay, everybody. I wanted to show that before we closed our call. Anything else we want to talk about?
Do have one more.
Yep.
So while watching the mini volume videos that I have been consuming over the past couple of days,
Okay.
I noticed that there was, it seemed like more than one person would say something to the effect of, even though there's not volume, so basically price could go up without there being strong volume.
Yeah.
So am I to take it that, let's say if the volume is going above its average, is, really, really far above its average, let's say, that that's probably the institutional, but if it's, let's say, at its average or something like that, that might be like retail traders, maybe. Does that make sense?
It does make sense.
I'm just trying to understand how without volume, the price can still be going up.
Well,
If
the
the-
price could potentially be going up, but it may not be a sustained move. So even though price is going up, when you have price going up, but the volume is not, then that lets you know that this move won't be sustained. So if you're looking for a strong trend is gonna be accompanied by volume that's gonna keep buying it and keep lifting it. But if
Gotcha.
the price is going up and the volume's going down, let you know that there's a reversal is imminent.
Gotcha. Thank you.
Mm-hmm.
I have watched a video was talking about how the market had been going up and everybody keeps saying a recession, and they were saying that the one thing that is showing that it can't sustain this continued going up, the market increasing, is that there's no volume behind it. He said exactly what you just said. There's no
Yeah.
volume behind the market continuing to go up right now.
Right.
And that's just showing that it's inevitable. It's gonna
Right.
have a
Exactly.
correction.
Because volume, what makes the market go up is people are buying. I mean, people have to keep putting money in. So with their people, and I say people, it's like big institutions. Well, big institutions don't want to buy stuff at a premium. They don't want to buy it at all-time high. They want to let the price pull back some, and then they buy at a bit of a discount and then let it run back up. So some few of us are interested in buying prices at, who wants to buy something when it's at the most expensive ever?
Mm-hmm.
No, you'd rather give it a minute, let the price come back down, right? Same thing with them. They don't want to have to do that. So what they'll do is start putting their money in places that are not at all-time high, which is why you see IWM starting to move. Nobody wants to spend a bunch of money on NVIDIA. So let's go move our money over to those small dudes and put some money over in the Palantirs and the IWMs and the Affirms and the finance areas. Let's go put money over there. So that way we can raise those up. So when NVIDIA falls off the bone and when Taiwan Semiconductors and AMD all come down, then we'll wait till those drop and then we'll put a little few dollars on that after the price come back down. That's what's happening there. Let's go put our money on some undervalued stocks so that way we can raise those up. All right, see you, Dina. All righty. Well, tomorrow morning I made it through my first week of school, and we made it through our first week of 9:30. Most we're gonna be tomorrow morning. What, Tanya?
I was real confused this morning. I was like, where everybody at?
Is it me? Did nobody send me a new link? What happened?
Right.
Is our list all right?
Right. I was like, where's our list?
Well, I'm glad you were checking for us, though. Appreciate that. Appreciate that. But yeah, me and Jamie will be on tomorrow. He'll be on with the antics. You know, he got to come on with the giggles. He don't be giggling. That be me. All righty. All right, y'all, let's go ahead and call it a night so I can go eat some food and go to bed. I was up late, really late. Let me pause this before I